Good afternoon, everybody. Welcome to Sunday Night Talk with Dr. D. And if you are here for the first time, please subscribe to our channel and hit the like button. In any area or any part of the world, you would notice that real estate is something that everybody's talking about. We're no different. We're talking about it too, but we're talking about it from a conceptual standpoint to whereby real estate is only a portion of a portfolio. So on this channel, we talk about portfolio as a way to protect your investments. And what I talk about every week is how I'm developing my portfolio and making it sustainable so that in any kind of condition, I should be able to reap the benefits from having a retirement portfolio that will take care of me without me having to do too much. Now, what my number is and what your number is may vary. I've always stated that my number is 10 million. So my portfolio is dissected into three areas. One, real estate, which is 50% of my portfolio. The other is 30%, which is a buying of businesses in our portfolio. The other sector is 20% passive investment. There again, that's the stock, bonds, ETFs, the dividends, reinvestment play or reinvestment drip, as well as my Forex account. So over the past few months, I've been elaborating on all of these areas. And of recently, I guess I would like to focus a little on the Forex side moving into the space. As everyone on this channel is aware, I'm in the middle of acquiring a radiology business with Warren Thomas. We're still in the middle of that process, but that's such a beautiful process to go through with partners who understand the space. So individuals who are looking to acquire businesses in that space, please don't go off and do it by yourself. There's so many landmines that you can make such a debacle of the transaction. I would tell you get professional help. However, if you can't afford that, simply join a team that's moving in that direction to where you want to be. And this whole thing about investing and, how should I put it, just getting ahead in life, you don't have to be the smartest person on the block. By all means, there is a myth that individuals who invest are the smartest people in the world. However, I'm coming to find out that investors who are doing it correctly are simply just copycats. And what does that mean? That means that they're copying what the other profitable investors are doing, and they're repeating it in their own portfolio. I'm no different in that my portfolio is designed specifically with a certain level of complexity only because of my background. So that's why my portfolio is divided the way that it is, meaning, and you don't have to have a portfolio like that. You can have one that's simple. You don't have to be as crazy as I am in this space because my real estate is divided into multiple areas: commercial, residential, multifamily, living assisted facilities, as well as hotels. Those are the 5 sectors that my real estate is divided in. Why those areas? Because that's a part of my background. So I came from a medical background, whereby my wife and I had owned a medical company for about 12 years. So medical is certainly a part of our overall portfolio in terms of the idea, but I know that I'm getting older and I don't think my kids are going to take very good care of me. So I'm investing in living assisted facilities so that I can have a place to go. At the end of the day, I want a room that's nice overlooking the ocean. And the only way I'm going to get that is to start investing in those assets as we speak. So there again, I'm investing with intention, primarily because of the things that I like to do. You don't have to have an elaborate portfolio in the real estate space. The buying of businesses, at the end of the day, um, I'm agnostic about companies that we can acquire. So there again, I did a show a couple of weeks ago on where to find money. Um, the buying of businesses, interesting space, primarily because there are monies out there that that's willing to partner with you, and you're not going to find them sitting down. You have to be active participant in every business that you want to be a part of. But there again, you have to do that all by yourself. You can actually do that with partners, and you bring something to the table and join the partnership group so that an acquisition can be done. So you represent either the money, you represent good credit, you represent um, maybe a little capital or something along those lines to get the ball started in an area that the group doesn't have a certain level of funding. Um, and you bring your expertise to the table. So you bring those four components to the table, you certainly can join any of these groups or create a group unto yourself. But there again, be active in the space of pretty much locating a funding source that can help you do the acquisition for no money down. Now, I've been in this space for a while. I've realized that when you get to some of the venture capitalists or the investment banker groups, they like to see some money. They love to see um, the sponsors take a stakehold in a project. However, there are some investment bankers who don't need to see the sponsors um, upfront capital. As long as the business can support their level of capital injections, they will entertain. Now, the difficulty that I've found in this space is those particular investment banking groups are very few. Every investment banking group have a mandate, and their number one priority is preservation of capital. However, if you can show them that you have a project that can supersede their level of capital, they will give you an open checkbook. Right? But it's difficult finding those individuals. And what I find out is that there are individuals out there exploiting their connectivity with the investment banking groups. So you want to tap into either a referral source that gets you directly in. A lot of times it's very difficult to go direct to an investment bank. Why? Primarily because it's so difficult to get them unless there's a previous relationships. So most of these relationships or funding sources have to come through broker dealers in a lot of cases. So if you don't have a broker dealer on your team, it's always good to find one, primarily because these investment bankers like to know um, how were you referred to them. And if you can do those things, then the sky's the limit. And I believe that Warren and I have just found that particular source of capital whereby they do anywhere from 25 million to 75 million. But you do have some loopholes to jump through in terms of getting through the door. Those projects are what they call interest. They add the interest up front. So if you're going for, let's say, 40 million and 15 million is the interest, your note now is 55 million, but they are willing to write a check for 40 million for you. And at the end of 5 years, they're willing to get their check of 55 million, something along those lines. So those are the type of projects that can move the needle for any individuals. So, but as we go through the space, mind you, we ran through a lot of crooks. In this space, you do go for a ride sometimes when you write a check, and I've done that too, and to no avail. We didn't get the money even after I wrote a $35,000 check. Well, those are some of the things. Those are some of the experiences you go through in this space. So if you can't play in this space, leave it alone, right? I could take a $35,000 hit because I have ways of replenishing that. So there again, now understanding what my portfolio is in terms of the real estate side and the buying of the business side, I am now turning my focus now on making Forex our primary income generator as a short-term money-making machine for us, whereby we want to start withdrawing from our accounts on a weekly basis profitably. And we've set aside capital in order to do that. So with that said, yes, I do have a long-term stock portfolio. However, the goal is, even in this down market, we can actually take our short-term portfolio to generate the capital and offset the losses in our long-term portfolio. So normally you would hear that this is the greatest buying time for stocks. Why? Because you're getting a discount. You now just need to understand what type of portfolio you are willing to build for yourselves. So for example, I've tied in a spending portfolio into my stock buying, which means that every time I spend on a debit card, guess what? The rest of that money, rounded up to the nearest dollar, goes to the stock market. And I also have a drip policy going into certain ETFs as well, to whereby I don't have to look at it. So with that said, the long-term portfolio is growing. Yes, the market is suppressed at this particular time, primarily because of what's going on. The war in Ukraine, the inflation rate not being stabilized, the country having a supply chain issue. All of those things are still impacting the long-term trend of uncertainty. And right now, the markets are going crazy to the negative side. Yes, we've had an impact with Bitcoin and the whole 9 yards. All those coins are coming down. So what are you doing in your short-term play now in order to offset some of those losses? So for me, I've been training and trading for about a year now. I've found a certain level of consistency with my particular strategy in the Forex market. And it's been no secret. I've been talking about it here quite a bit. But there again, it takes a certain level of training in order to play in this space. As a day trader in the stock market, you can't simply day trade Forex the same way. It's a completely different market altogether. And what I found out is that you have to start out, anyone who's starting out should start out in a demo account and get yourselves a strategy that works with your lifestyle. Meaning, in the training process, obviously, I didn't pay no attention to my own rules in terms of trading demo, because I want to feel what it feels like to have the emotional challenges to trade live in the markets. But at the end of the day, that emotional feeling, I now register as a educational moment, because whenever I had a loss, that became a learning experience to understand exactly why. So with that said, my losses now are a lot less. I have found myself in a 60 to 65% win rate. I have a strategy in terms of management of the lot sizes that matches how I want to live. And when I say that, you can be up all hours of the night doing this thing and wreck your day if you have a day job, right? And so I've figured out a way now to trade at nights so that I can get some sleep. So either I wake up with a smile on my face and in profit, or my strategy is a hedging strategy. I would either ended up in a hedging position, which is fine for me, but at least I would have not lost the time because I'm tired. And I would not have lost the time staying up through the nights and knowing that I have duties ahead of me for that following day. And yes, I've done every mistake that you can imagine. I've traded the whole night, um, knowing that I have to drop kids the next morning, knowing that I have meetings scheduled the next day. And, so health wise, you really need to find a balance in this thing. And yes, there's a lot of money that can be made in Forex, but you have to be extremely disciplined to understand exactly what your entries and your exits are, so that when it's time for you to take the money off the table, take the money off the table. This thing has a way of reversing on you so that you end up in a losing position. And until you understand the flows, the inflows and the outflows of how these markets move, um, and I know a lot of you won't listen to me in terms of staying on the demo side, but for the most part, um, take a minute to fully absorb what it means in order to really be an investor, right? Not a gambler, an investor. Have a long-term view of your entire portfolio. Know all the moving parts of your own portfolio, right? And the next journey that I am on in terms of building this portfolio is I saw my trust just arrived before I came on this trip to Tennessee. And for those of you who are unaware, this is the 4th of July weekend. And it's normally my wedding anniversary on July 2nd. So normally around this time, we normally find a place to go to that's different, that we've never been before. And we take a week to really enjoy and immerse ourselves within that particular culture. And where I'm at right now is called Seville, Tennessee, uh, which is, I think, an area called Pigeon Forge. And it is one of the most beautiful places that I've seen. Of course, I'm in the mountains. We have a beautiful log cabin that we're staying in, and I have never heard this much crickets in a while. But whilst I'm up here enjoying the peaceful scenery, Dollywood, a lot of activities for the kids, it gives me time to reflect on planning what the next 6 months is like for the portfolio, envisioning of where I need to move money around and how I need to move and develop our accounting and tax structures. So accounting and tax structures is not something that I only work on at the end of the year. It's also something that I work on currently through the year. So I don't waste a minute with my team understanding exactly what's our tax implications as it relates to what I'm going to owe or what the IRS is going to pay me back. My goal is just to make sure that I have enough documentation and to make sure that my finances is aligned with everything that I am doing legally. Yes, I understand that there are some gray areas in everyone's portfolio, but try not to have too many gray areas. You have to envision what that looks like for you a year out, 5 years out, 10 years out. Where do you see yourself in that time frame? That's exactly why I had a show the other day, and I've asked each of you, uh, what is your dream? Because I'm going to keep you accountable to that, just as you're going to keep me accountable to my own. I have a 3-year window whereby I am planning on exiting corporate America in the next 3 years. That's not an easy thing to do. And by no means anything you do in terms of developing your portfolio, it's never going to be easy. Why? Because this journey is not the easiest journey in the world, but it's certainly doable, right? It's not easy, but it can be done. And sometimes you need clarity in order to do that. So for me, that clarity comes a lot of times coming out to a different location, seeing different people, enjoying that culture. And hence, for me, once a year, I take a break around this time in order to do it. But I can see my picture for the future, even the next 6 months. I can see the next 6 years a lot clearer for me, right? And everybody should take some time also to understand exactly what they're driving towards and constantly revise your plan every 6 months or every 12 months. If you do that, you'll stay on track. You can get lost in this complexity of trying to create a future for yourself because nobody is coming back to us and giving us the information. You're going to have to really be intentional about where you park your dollars, how you make your money, and how you leverage credit in order to accumulate. Now, it's no secret that if you take out, you need to put back in, especially as it relates to credit. So, where are you finding the credit that you can take back out and not have a losing track to whereby it negatively impacts you and cripple your portfolio before you even start? So, start slow. There again, that's why I went back to talk about where we're finding monies in the credit unions. And I love the credit unions. Love the fact that there's a HELOC out there. I love the fact that you can find, with a good credit score, you can find capital out there that certainly take advantage of, as well as making a foundation for yourself that makes sense in terms of the destination of where you're headed. Yes, it's difficult to have a destination if you don't know where that destination is. But if you're intentional about what your future is, you should have the best future possible, knowing that you have enough capital in order to deposit in a location with a return. And it doesn't matter whether that return is small or big, as long as you're getting a return. Now, yes, you can take some chances, as you've heard. I've taken my blows a lot of times. But there again, had I not taken those opportunities, to me, every year, losses that you take in your portfolio is an advancement in your education. And if you're going to be in these spaces, know that there's an educational cost that you have to pay. And it's extremely painful. Sometimes it's extremely costly. But if you're too conservative in life, you would not get the better opportunities out there. Meaning, how can we have a conversation, a $50 million deal, when you don't understand what a $50,000, right? The $50,000 deal, whether you are a part of it or not, whether that structure had any value to you or not, had a framework. And if you didn't understand what that framework was, it's going to be very difficult for you to have the vocabulary in order to understand what it means in order to talk about a $50 million deal, because those are two separate amounts. The psychological impact on you as an individual will be immense if you don't take advantage of understanding the frame, that $50,000 deal. Because the $50,000 deal is going to give you the footing in order to have the vocabulary for a $50 million deal. And you want to associate yourselves with individuals that are constantly playing in the space, and that's constantly using the language or the financial vocabulary in order to have those conversations. An example that I can think of, um, when we first started to talk about our medical practice and the notion of borrowing $1 million came up, we were like, wow. It was difficult for us to phantom, and when I say us, I'm talking about my wife and I. It was difficult to us to phantom what that $1 million was like, right? But having the experience in my prior life with understanding um, how notes work and how to leverage what we've had, we've done a really, really good job in the space of managing the medical facility for that $1.2 million that was extended to us. But that gave me the framework now to collaborate with anybody in the medical space, not only because of the experience, not only because of the money involved. Now, it doesn't matter whether that deal is 50 million, 1 billion, 1 trillion. The framework of those deals in the medical space are not going to change that much. And bringing that level of knowledge to the table then gives me an upper leg when it's time to negotiate, because now I can come from not only an accounting standpoint, I can come from an investor standpoint, I can come from a psychological standpoint. We can start asking questions, even in some of these takeovers that we will be participating in. I can ask the hard questions in terms of how are your EOBs established? How are the insurances paying you? How are the doctors satisfied with the level of compensation that they have been at for the last 10 years? Are the doctors willing to become investors? Are they willing to take an earnout? Are there any possibility for a non-compete within the establishment so that if we do take over the practice, there won't be any doctors that would like to liquidate from the practice and then compete, like opening right across the street? How do we handle all of these things legally? Well, every last one of those questions came from the hard experience of being in a medical practice. So outside of the numbers and outside of the structures, I now have the vocabulary now to understand exactly what the deal should look like. Now, I'm getting older, I'm getting a lot wiser because I'm constantly playing in the space. Everybody needs to take time for themselves in order to collaborate and educate themselves on what their framework is like. I'm spelling my framework out to you as an audience. You then can either match it or mimic it. But from the sound of my voice, there's going to be some things that resonate with you in terms of the journey that you're on. Now, I come from a portfolio perspective, and it's something that I love, right? Because even if I make a mistake in one of the areas, the other areas will compensate for me. And it will compensate to the level that as the portfolio grow, I grow, which means now that we have much more to offer as teammates come on board, as capitalization comes on board, as individual who would like a certain level of credibility that comes on board. Because whether it's my portfolio or your portfolio, you would have engaged in so many networking capabilities in order for your business to be developed. And each one of us would like to leverage that level of network in order for each of our portfolios to get a bigger portion of the pie. So yes, when we talk about partnerships and joint ventures and everything else like that, what are we really talking about? We're talking about having the ability to leverage networks, do deals, earn some monies so that our portfolio can grow. So it's all going to come back to what these deals mean to you and your portfolio as to either why you're getting involved or participating. But at the end of the day, there should be some type of reward coming back to your portfolio. If you're not doing something to enhance your portfolio, guess what? You just wasting time. And I'm sorry to say that, but at the end of the day, if you're not increasing or enhancing your earning capabilities or your networking capabilities, what are you doing? Okay. And some of you may just be at just a W-2 or even a 1099, and that's okay. But at the end of the day, what are you doing with either the extra monies or the saved monies that you have? In a lot of cases, it's small, yes. But at the end of the day, if you partner up with other people along the very same journey as you are, you can still have the same impact. And there are ways of sharing without exploiting your capital, right? Bring something to the table. And if you can bring something to the table, then you can just simply be a part of a bigger play, which means that a good friend once asked me one time ago, I said, Devaughn, do you want to own 100% of a million or 1% of a billion? Think about that. You know, I prefer the 1% of a billion. Why? That 100% of a million is meaning that I sometimes would not have all of the resources, which means I'm exploiting myself. One day I'm wearing a marketing hat, one day I'm wearing an accounting hat, one day I'm wearing another hat. And because you're wearing all of those hats, if you can look around, you would not be able to enjoy the scenery that Pigeon Forge has offered me. Why? Tennessee is one of the most beautiful places, and I am happy to be here. However, if I was wearing all those different hats, I wouldn't have the time in order to enjoy even some of the peace that's needed in order to meditate on what the next 6 months should look like. And yes, we all get emotionally low at times, but there again, understanding how to stretch your own personal selves as it relates to your portfolio is something that's super critical for everybody to take advantage of. And it's my job simply to share my journey, share my love for business, but also share the reality of business as well too. Business is not all fun and games. There's a dark side to business, which means that you can get trapped in business. Some people say, what do you mean by that? Well, that same $1 million advancement with you wearing multiple hats, what's your exit strategy? If you don't have an exit strategy, you're trapped in that business until you can afford one. Most people who start a business don't have an exit strategy. Some don't even talk about it. But are you willing to exit your business by selling it to somebody? Are you willing to joint venture your business with somebody as an exit? Are you willing to recapitalize with the SBA with a joint venture with your business? How are you going to get out of your business one day to whereby you then can have the freedom to move on to step number 2? If you can't move on to step number 2, you are now trapped in step number 1, managing a business, whether it's profitable or not, without having an exit strategy. Some people call that hell. What do you call it? But for the most part, some level of experiences and tractions can't absorb that type of hell. So if that type of hell is not for you, then it's prudent for you as an individual and a student of business to understand what that is so that you don't have to spend most of your time in that space. And there again, the only way you're going to get out of that space is meditation, collaborating with others, understanding the space that you're in, as well as constantly networking for your step number 2. Those are some of the ideas that's presented here on this show. There again is my personal journey that I'm sharing. You might see similarities in some of these institution or some of the ideas that are presented here, or you may see something in action that you can connect to. You can certainly connect with me by email. I will disclose my email in the link below, but know that I am constantly and actively building a portfolio. Will that portfolio reach 10 million? I think so. I'm young enough that I can do it. Millionaires in the United States are average age of a millionaire, 53 years old. Average age of a billionaire, 63 years old. So with that said, I got time. But for the most part, understand your portfolio, understand the space that you're in, understand the networking capabilities of others that you can leverage, and have others leverage your network as well too, because that's the best way to get ahead. And that's why we have created this YouTube channel, so that we can do just that. So there again, if you're having an issue and would like to further discuss the portfolios or how you can develop your own portfolio from a W-2 or 1099, hit me up. I'm not unreachable, but know that my time is pressed, and I'm on the phone mostly 24/7, 7 days a week, most of the times. But I will make time for those who email. So if you email me, and I'll put put the email in the description of the link below, and you can reach me that way. So without further ado, if there's anything that you've seen or heard that was a benefit to you, please hit the thumbs up button and subscribe to the show. And who knows, maybe you and I will be talking about a deal that you would like to do as you leverage the network that I have behind me. So the networks that we have behind us is extensive, but you won't know what that network is until you make the call. Or if you have a deal out there that you would like to talk about, whether it's $1 million, whether it's $10 million, whether it's $1 billion, I certainly will entertain it. So there again, thank you so much for spending time with me this evening, and I hope it was beneficial to you. Join us next week, Sunday at 7 p.m., where we'll be talking about what happened during this week as it relates to how I'm investing in the Forex market for this week. And I'll bring some results next week to you so that you can have an idea. Because for those of you who are unaware, I'm trading gold for this week. And I'm going to record and document what that trading experience is like and share it with you next week. So I'm going to end the recording here, but I'm going to ask anybody if they have any questions, open up your microphone and share any of the questions that you have at this particular time frame. And if you don't have any questions, I mean, if you just look behind me, this cabin is beautiful. I mean, it's right near a creek with running water.
I have a question.
Go ahead, Allison.
Okay, so with Forex, is it, I'm learning some stuff about it, so I have two questions. One is it possible to, is it normal to say that 10%, 20%, 30%, 40% is something that can be earned in Forex daily returns with the trades that are done?
No, that's not common.
That's not common.
Nope, that's not common. Now, I said that with the understanding that those who come into a marketplace with no knowledge, no experience, that's not going to be a common thing. However, let me hear that you have some experience. Let me hear that you understand exactly your strategy and the psychological imprints of what you're doing, and you have a track record with you. Guess what? Now that 10, 20, 30% becomes extremely normal.
Okay, that's what I wanted to know, because it's coming from sources that are supposed to be quote unquote master traders for 20 years. If
Yeah.
they're saying that, I want to know if that's even possible. And I know you would know that.
No, that's possible.
And then what is a good drawdown? Drawdown is what I've been saying. Heard somebody said it shouldn't be any more than 5%. Or is the other people, some other master trader saying that, you know, this is not about the drawdown, it's what the percentage is per day, or I don't know. What's with the drawdown thing?
All right, drawdown is, for those of you who are unaware of the drawdown in Forex, sometimes you take a negative hit in Forex. However, there are certain hedging strategies whereby you can lock off, or you can just simply wait on the reversal of your trade to go in your favor. And if you're waiting on a trade to go in your favor, that negative movement from the position that you have established, that is called your drawdown. Right? Now, there are a number of things that go into your drawdown. Let me give you an example. Let's say I take a long position on gold. Say I took a one standard lot size on gold at $1,800. Well, what does that mean? One standard size. Any movement of $1 in any direction, that's going to be $100 positive or negative, depending on the direction. Which means that at 1801, I just made $100. But at 1799, I just lost $100. Right? So now that 100 that I lost, that would be considered drawdown. Now, depending on my account size, so let's say if my account is at $10,000, that $100 ain't gonna mean too much for me, right? Because now I am at a percentage rate of the account of, what's that, 1%, 0.1%, something along those lines. So 10% of 10,000 is 1,000. 10% of that is 100. So yeah, I'm at 1% of my $10,000 account. So at 1% with a $10,000 account, that's not going to impact me too much, right? So drawdown at that level doesn't mean too much of a bag of beans for me. However, if I'm at $1,000 account size and I take a one standard lot size on gold, same parameters, $100 now is 10% of my account. That's significant. So you want to understand exactly your risk management with the drawdown. So for example, had I had an account at 100,000, that drawdown is not going to mean too much to me. But had I had an account at $1,000, that's going to be significant. So I got to be careful and understand exactly what my strategy is as it relates to that $1,000 account versus the $10,000 or the $100,000 account. So drawdown is, I play with drawdown all the time, right? You got to get comfortable with drawdowns in the Forex space. You have to get comfortable with losses. You have to know exactly what your personal propensity for losses are. You have to know what your risk management system is. So there are a couple of things in there that you have to really master in order to really become comfortable in the space. Now, why I like Forex over any of the other markets, once you get good at understanding setups, it becomes extremely profitable and extremely boring because you now exercising one trading system for one account, and that's what makes it boring. All the experts in the space, they don't know multiple systems. They know one system, and they've already calculated what their drawdown should be. Now, based on the discipline that's learned, you're going to have strategies in place in order to manage those drawdowns. Some people stop trading for that day and they trade another day, which still accounts for their success rates. In this space, you want a success rate of 65 to 85% win rate. And any of the software will calculate that for you. So yes, you can win. Yes, you can make a living from this thing. But every story that I've heard so far, they went into pain before they got profitable. There's a show called The Trading Nut on YouTube, and it's by a guy out of, I believe he's out of, it's either Australia or New Zealand. But he showcases stories of individuals who are successful traders now, and he's categorizing their journey in terms of how did they start it out, how did they become profitable. I suggest each and every one of you listen to that podcast. He's up to now 100 and I think I've listened to like 165 or 166 today. On these long drives, like I did on Thursday and Friday, guess which podcast I was listening to? I was listening to that one. And I listened to that primarily for motivation. But more important than the motivation, the successful traders on there are sharing their strategies and their secrets. They're sharing it openly. So to absorb all of the information that they're giving, take it in bits and chunks. And hence, that's why, nobody in the world should jump into the Forex market without understanding exactly what it is, what their strategy is, what their propensity for losses are, and understanding their psychological makeup. So when the losses do come, many people handle loss differently. Allison, you may be punching the wall. The other guy may be throwing himself off a bridge. But at the end of the day, how are you mentally astute in order to handle the ebbs and flow of this thing? Because this market moves similar to being on the beach and watching the shores roll in and roll out. I just like to know that when the shores roll in over my feet, I have a bucket of money there waiting. So when it rolls out, the bucket of money stays with me. And that's the general concept. And you'll get into something what's called Elliott wave. There's an Elliott wave theorist out there about the ebbs and flow of the market. And there again, I've never seen a market move like this before. But there again, I know that it's extremely profitable for those who are willing to commit, be patient, allow the trade to come to you, and trade with proper risk management. And the sky is the limit. So 10% is a joke as to what you can do. I mean, I've seen individuals double their accounts in a day, right? But they have skills to do that. You may not like to see your account in such, how should I put it? You might not be able to handle the mental capacity of what that means in order to double an account in one day because of the risk size that they have to put on. They have to over leverage their accounts in order to do that. So you may be comfortable with over leveraging your accounts because that thing goes the other way. Guess what? You just ate up most of your profit that you have earned over the 2 weeks or 3 weeks process. Has that happened to me? Sure, it has. That's part of the learning curve. All right. So when I see, I take it off.
What do you think about the use of AI bots in the space that are managed by quote unquote traders or master traders, whatever, and they offer their services in that way? Like you can mirror what they do as opposed to learning it yourself. What do you think of that?
Well, I think that if you're learning a skill set for yourself, you would never need anybody else. That's just my personal view. However, some individuals have had success with bots. I'm testing out 2 bots right now, and I'm seeing which one can outdo the other.
Okay.
However, in both of those bots that I'm testing out right now, I have maybe 10 accounts open, 5 between each of them in demo to see which one is most profitable and which setting is most profitable. Right. So far, I've been watching these bots now for 4 weeks. Both bots are negative on every setting imaginable. Right. So, so those particular bots, until I see one that have a proven track record that's profitable, rely on bots too much. And even if I do a bot, I'm not going to put any money behind it. I'm going to let it sit on demo until it proves itself in different markets, because these markets are changing. I mean, for those of us who were following gold over the last couple of months since the war started, gold was at 2,050. Guess what? It just hit 1,785 last week, and it did that twice since then, right? So it between 1,800 and 1,870 over the last couple of weeks. It went below 17. It went below 1,800 this week past, and it's going to be amazing where that ends up, right? And there again, learning in the Forex market, you'll get into things such as support and resistance. Those are key zones, and all the experts trade in zones. But they have enough managerial skills to understand exactly what the reversals are like, as well as what breaking a trend is like. So having that versus understanding bots, I always want the control to be with me. I want the blame for anything to be with me. I'm not going to blame a bot for blowing my account. No, I'm going to blame me. So when I hit the button, I want to know that my skill set is at a level to whereby it doesn't matter where I'm located. I can trade anywhere in the world and earn a living. Because at the end of the day, it's not about the money, it's about the process. If you understand the process, then you now have the capabilities to have financial freedom without all of the stresses on one's life to earn money as a W-2 or even a 1099. And don't get me wrong, they're great avenues. But imagine if you only have to deal with one person. And that's what I believe Forex trading, meaning I only have to deal with me and the markets. That's it. I don't have to deal with accounting. I don't have to deal with legal. You just don't have to have too much conversations with nobody, right? And I like it from that aspect, because we're going back to the business being a trap, or you a prisoner in a business. You can be trapped in a very successful business the very same way. At the end of the day, what are you in business for? To get to a destination so you could become free. So
That's right.
That's in a business, or whether you're using Forex as that play, know that we all are in a prison unless you are financially astute in order to escape your prison. And there again, whether that be a W-2, a 1099, you in private practice, you working for somebody else, what are all these systems there allowing you to do? They're allowing you to work for them so that they can make the money. However, trading now is whereby it's you and the markets, whereby you either make the money because of your skill set or you lose it because of your skill set. So the goal now is to simply get into a very positive skill set that you now can have financial freedom to do and live wherever you want to be and speak whatever it is that you want to talk about.
What if you know that you know that even though you may be smart or whatever, you know that you just really want to You can have 6 screens up like you do and do what you do, but no matter what, you know, there's people who are more talented at certain things than you are. And what if you just want to mirror what they're doing? I mean, is that something that you're going to be offering at some point? I don't know.
Never.
Never. Okay.
I won't offer that, right? Because
Okay.
at the end, um, I shared my dream with everybody. 3 years, I'm out,
No, I get that. I get
right?
that. Mm-hmm.
So I want all the control to be with the individual, right? So that's something that I would offer. Control being with the individual. You hitting the button for yourself. You
I
understand
see.
why you hit that button, when you hit that button. That's something that's much more powerful than parking your money with anybody or mirroring with anybody. And don't get me wrong, all of those are good avenues. Some people have enjoyed the success of mirroring another trader. However, suppose something happened to that trader. He goes away, he dies, he retires. Where does that leave you? That leave you in a resource that you can't capitalize on because you haven't learned the skill and you've depended on someone, you've given your power away to somebody else. You yourself didn't obtain the power for yourself. So that even if all these systems around us should go somewhere, that leaves us in hell again. Why? Because now you either got to go find another trader to produce the level of income that that other trader did, wherein if you had learned the skill, you don't need all of the excesses. You could become the master of your own future. And there's power in that because at the end of the day, you decide your destination. Nobody else does. And that's what you want. You want to be that powerful to whereby, you get to enjoy um, listening to the crickets of Tennessee in, Seville, Pigeon Forge area.
Yeah,
And
I,
it's a,
I get that now. That makes sense because something can happen
yep,
and then, you've lost the control and you're like just stuck.
yep.
Hmm. I get it. I understand.
And it becomes a lifestyle. And you'd find that most of the people who are sharing their stories, whether it be Instagram or everything else, they're not talking about trading. They're talking about the Lamborghini that they just purchased.
Hmm.
Right? And don't get me wrong, all that's good stuff. All that's motivation. And, when you see a 23, 24-year-old guy purchasing a Lamborghini, no education, no nada, what that tells you? That tells you that this game isn't really for the smartest. It's really for the ones who are willing to endure and put the time in understanding their skill set. You can duplicate that skill set, but you got to put the time in. You got to put the work in. Right? Don't try to avoid the work that have to go in order to be successful. Now, all those cats are successful in their own way because they've had a certain level of financial success. Yes, we who are a little bit older, of course, we went the traditional route, some of us, whether it be education, whether it be a job for 30, 40 years, that kind of thing. But you realize that there's so much money out there. I mean, when you look at the Forex market at $6 trillion per day, not that the question comes up as to why one would waste their time on education and all this other stuff. Of course, those are lofty goals. And for those of us who have achieved all the education that we need, that's great. Those are internal goals that we had for ourselves and we hit them. But at the end of the day, even achieving all those goals does not equate to having financial freedom. All of those goals in the educational realms, they give you an opportunity to compete at a salary level, at a W-2 level, or if you go into business, accelerate that through a 1099 or having a business for yourself, which is great too. But imagine having, there again, the freedom to deal with just one person, the market. Because all of those other gigs, they require you either depending on a boss or supervisor or something else that has control of your future. Why not you taking the decision in the palms of your own hands to have the future that you have designed? That's going to be far more attractive than allowing others to make decisions on your behalf to give you the life that you want. Any additional questions? All right. With that said, I hope everyone has gotten something out of this discussion that we've had today. And as you build your portfolios, I'm certainly going to build mine. Let's see how we can get to the destination together or separately. But at the end of the day, let's get there. Let somebody get there and come back and bring the information. And hence, that's why we all are here, to share in a body of knowledge to whereby we need to have the ability to make certain that we get to the destination that we design. Life would not be worth living unless you accomplish your ultimate goals or your ultimate passions. And if you can't do that, in my book, I see that as a waste for me personally, because then it would have said that I would have not have used all my talents wisely. And in a lot of cases, that's why a lot of the A students work for C students, because the C student is focused on one thing. The A student is too talented in all these other areas, so they spend time in all these other areas liquidating where the true talent and sources of their power comes from. So the A student, even at Google, working for someone else. The A student at, let's say, the Tesla, they're working for someone else. They're depending on that W-2. So their future is in the hands of somebody else. So that's it. That's just it. Let's take back our own destination to be where we need to be, and don't have anybody controlling our destination for us. Let us control our own destination. All right. With that said,
Amen.
Thank you, Allison. I'm going to end the segment right there. But there again, I'll see you guys next week at 7 o'clock. Same bat channel, same station.